Welcome to Vskills YouTube channel. In this video, you will learn about the top interview questions for mutual funds. So, let's get started. Question number 1. What do you mean by private equity transactions? The answer is, a private equity transaction occurs when private equity firms make investments in certain target enterprises. A target firm is one that has the ability to do well in a short period of time. Question number 2. What is equity funding? The answer is, equity funding refers to insurance coverage paid for by a mutual fund. Individual investors can enjoy the benefits of a classic mutual fund investment because the value of the mutual fund shares pays the insurance policy premiums. Question number 3. What is the weighted average rating factor? The answer is, the weighted average rating factor is a method of assessing, analyzing and expressing the total risk of a portfolio of investments. Question number 4. What is options trading? The answer is, options trading is a contract between a seller and a buyer to purchase or sell a single or many lots of underlying assets at a predetermined price on or before the contract's expiration date. Question number 5. What is cash equity? The answer is, the total amount of cash or net worth of all the cash that may be acquired from the investments and securities in the portfolio is referred to as cash equity. Cash equity monitoring is a better approach to know if your present investment mix is functioning, and it also helps you decide what to keep and what to sell. Question number 6. Explain the term double bottom. The answer is, the term double bottom refers to a stock that is in a downtrend, hits a support level twice, and then reverses to resume an uptrend. Question number 7. What is bridge equity? The answer is, bridge equity is a type of financing that allows potential acquirers of firms or assets to commit to a transaction before the requisite capital is raised. Question number 8. What are the different types of equity markets? The answer is, the different types of equity markets are public issue, right issue, private placements, preferential allotment. Question number 9. Mention some of the mutual fund schemes. The answer is, some of the mutual fund schemes are maturity period, open and closed-ended schemes, investment objective, growth scheme, balance scheme and income scheme, other schemes, liquid fund, sector fund and tax-saving fund. Question number 10. What is return on equity? The answer is, the return on equity ratio essentially measures the rate of return that the owners of common stock of a company receive on their shareholdings. Return on equity signifies how good the company is in generating returns on the investment it received from its shareholders. Question number 11. What is net asset value? The answer is, the net asset value, or net asset worth, of a fund, is the value of one unit. It's computed by adding up the current market values of all the fund's holdings, removing liabilities and expenses, and dividing the result by the number of units outstanding. Question number 12. What leads assets to turn into private equity? The answer is, the following reasons lead to turn assets into private equity: raising capital, increasing regulation of public markets, effective public markets, financing the private equity firms. Question number 13. What are the different types of derivatives? The answer is, derivatives are classified into 3 types. First, future or forward contract. Second, options. Third, swaps. Question number 14. Which section of the Income Tax Act enlists TDS on interest on securities? The answer is, Section 194 of the Income Tax Act enlists TDS on interest on securities. Question number 15. What is value investing? The answer is, value investing focuses on identifying underpriced stocks. Value investors look out for stocks selling at low prices, but which have the potential to give attractive returns in future. Question number 16. How are mutual funds classified? The answer is, mutual funds can be classified as portfolio classification, functional classification, geographical classification. Question number 17. What are the different investment plans that mutual funds offer? The answer is, some of the important investment plans include income plan, dividend reinvestment plan, systematic investment plan, systematic withdrawal plan, retirement pension plan, insurance plan. Question number 18. What is a check-writing facility? The answer is, Cheque-writing facility is a service that enables investors to write checks against their mutual fund account balances, such that the checks usually must meet a certain minimum amount and the service is restricted to money market funds. Question number 19. What is growth investing? The answer is a common investment strategy in which fund managers seek out firms that have the potential to achieve above-average returns. Stocks are typically owned for price appreciation rather than dividend income. If a stock has the appropriate potential, growth investors, or management, are willing to pay a premium for it. Growth investing is a different type of investment than value investing. Question number 20. What is value investing? The answer is value investors, or managers, seek out undervalued stocks, as opposed to growth investors. Value investors hunt for stocks that are currently selling for a low price but have the potential to provide attractive returns in the future. Question number 21. What is hedging? The answer is a broad phrase that refers to a variety of risk reduction measures. By shifting a larger portion of the portfolio into cash, a fund manager can partially hedge against a market collapse. The management could also sell stock index futures contracts as an alternative. If the market falls, the gains on the shorted futures will more than make up for the portfolio's loss of value. Question number 22. What is passive investing? The answer is index fund managers follow this investment strategy by simply benchmarking their portfolio to a common stock market index such as the BSE 30 or the SPCNX 50. The fund management only invests in stocks that are exactly the same proportion as those in the index. It is dubbed passive investment because there is no attempt to outperform the benchmark index, but rather to merely reproduce it. The index fund will never, and will not aim to, outperform the benchmark index. Question number 23. What is the portfolio turnover of a fund supposed to mean? The answer is the quantity of buying and selling activity in a mutual fund. The lesser of securities sold or purchased during a year divided by the average of monthly net assets is known as turnover. For example, a 100% turnover rate means that posts are kept on average for around a year. Question number 24. Explain domestic funds. The answer is domestic fund houses create funds that pool national savings within the country. These schemes could fall into any of the portfolio classification and functional classification categories: GCMF, UTILICMF, SBIMF, CanBank MF, Bank of Baroda MF, Bank of India MF, Morgan Stanley, Templeton, Alliance are some of the Indian mutual funds that have started schemes. Question number 25. What are offshore funds? The answer is after receiving RBI approval, offshore funds can invest in foreign company stocks. The goal of launching offshore funds is to attract foreign capital for investment in the issuing company's home nation. These funds help with cross-border fund movement, which is a quick way to receive foreign currency. Offshore funds, in terms of investment, allow international investors and global portfolio investments access to domestic capital markets. Question number 26. What is an asset management company? The answer is a highly regulated organization that combines money from a large number of people into a portfolio with certain goals in mind. As a result, it is known as an asset management company. Typically, an AMC manages a number of funds, both open-end and closed-end, in a variety of categories, including growth, income, and balanced. An AMC is a company that manages mutual funds. Alliance Capital Asset Management Company Limited, for example, is affiliated with Alliance Capital Mutual Fund. Question number 27. What is a cheque-writing facility? The answer is, cheque-writing facility is a service that enables investors to write checks against their mutual fund account balances, such that the checks usually must meet a certain minimum amount and the service is restricted to money market funds. Question number 28. What is over-the-counter market? The answer is the over-the-counter market is a decentralized market with no physical location where market traders or participants deal with one another by telephone, email, and proprietary electronic trading systems. Question number 29. What are derivatives? The answer is financial instruments that are based on a single underlying asset or index, such as a stock, bond, commodity, or stock price benchmark. The price of derivative securities rises and falls in lockstep with the price of the original security. Derivatives are frequently leveraged, which makes them more volatile. They can be used to speculate as well as to mitigate or regulate a potentially harmful risk. Standardized derivatives include options and futures. Others are tailored to satisfy specific requirements. Question number 30. How do you calculate the expense ratio for a fund? The answer is: the expenditure ratio for a fund is calculated by dividing the fund's yearly expenses, at the end of the financial year, which include the management fee and administrative charges, by the number of units outstanding on that day. For more such videos, subscribe to our channel.